It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne with Minmin. We're counting down to the open of markets in Greater China. Our top stories this morning. Asian stocks fall after a weak forecast from Broadcom and fresh clashes between the U.S. and Iran. Oil slipping with Israel and Lebanon agreeing to a ceasefire. Bloomberg learns that DeepSeek is close to finalizing a deal to raise more than $7 billion from investors including Tencent and CATL. Also ahead, SpaceX officially files for the biggest IPO of all time. Elon Musk moving closer to becoming the world's first trillionaire. And China expands outbound investment rules to cover individuals, potentially raising compliance hurdles for tech founders and ordinary stock investors. We thought things were going to be a bit more rosier today, given the fact that we had some positive headlines around Iran, the ceasefire between Israel and Lebanon. But then again, it seems like maybe things are a little bit too, frothy when it comes to the AI trade here today. And I think that Broadcom outlook certainly did weigh on sentiment here today.
Yeah, and that Broadcom outlook was actually really good. It's 180% gain on year. That was the forecast, but still investors are looking for more. And really shows you how much frothiness, as you said, there is in terms of expectations, right? It pulled down all of these tech stocks in the U.S., and we're seeing that contagion here in Asia as well.
Yeah, and this is against this backdrop of continued fundraising from some of these big AI players, right? You talk about what the DeepSeek and what our reporting has suggested about the amount of money that they're raising, right? SpaceX as well. We finally got that filing here, and it seems like there could have been maybe more sort of a reason to continue on this AI trade. But, you know, we've been talking about this for a while now when it comes to Korea, right? There's been net selling from foreign investors, and that maybe is starting to kind of take a bit more of a hit now, that market.
Yeah, it's probably, I guess, a victim of its own success, right? A lot of investors are now putting money into Japan. We are seeing net selling in Korea and in Taiwan as well, just because they're hitting their position limits there. And you talk about SpaceX, right? That monster $75 billion IPO, and how that's potentially going to open the doorway for more mega IPOs. And what does that mean for markets, right? In terms of the depth of liquidity for markets as well.
Yeah, so that certainly is going to be the key thing as we watch, of course, where we are in this AI trade, right? Is it going to be the likes of North Asia versus, China, which has been sort of the preference from investors here today? But today, at least, we are seeing a bit of a cooling across risk assets. And it really could be down to what we're seeing, right? King dollar seems to be back in the haven of choice here right now. We had pretty strong sort of job numbers that came through from the U.S. So yields are picking up once again. Those rate hike bets are from the Fed are kind of increasing now. The Kospi returning from that holiday, and we're down about 1.6% here right now. It's interesting, too. Goldman actually did raise their targets for the Kospi yesterday from 9,000 to 12,000. The TAIEX also, they think, could hit 51,000. So they still think double-digit gains from here on forward. But today we're just taking a breather. Chip makers certainly in focus here, just given the Broadcom outlook. We saw that 14% drop after hours for that company. So that's certainly weighing on the semi side of things here today. SK Hynix leading that charge lower to a 3% drop here right now. And commodities as well. So we do have some positive, signals coming through from Israel and Lebanon agreeing to that ceasefire. So oil markets have kind of cooled down as well. We're so lower by 0.9%, around $97 for Brent here this morning. Even just some of these kind of hot commodities that we've been talking about, whether it's copper, aluminum, also coming off here today, even tin, which we talked about, which is kind of part of that whole AI story as well. A lot of the movement has been in FX in the last 24 hours or so, right? So you had the dollar kind of reigning higher here. Dollar yen was above 160 at one point. Then there was these BOJ comments from the governor, Ueda, seemed to suggest and maybe signaling that a hike could be coming as early as this month. So you are seeing a little bit of movement, but not that much. We're still around that 160 level here. So we are on intervention watch, not just for the yen, but also for the won. Coming back from that holiday, and we are seeing here a little bit more moves here after what we heard from, after dropping to that 2-month low. We're coming off that just slightly here, but they have been talking about excessive one-way moves. So EMFX certainly could be roiled here today. Of course, we saw what happened to Indonesia yesterday. Yields are coming coming off some of the initial movement and drop yesterday when it comes to treasuries, right? So there we have the jobs report coming up, so we'll see how that all fares too. But really, the setup to China looks like this here today. Futures are looking like this. We talk about renminbi as well. Actually, that strength that we saw also broke after the news of those tariffs that the U.S. Has proposing here for countries up to 60, including China as well. So we're around that 677 handle. Futures are in the red this morning.
Yeah, and China actually hitting back at those accusations of forced labor as well. But meanwhile, that AI theme continues to be a focus here, right? And we did hear from Bridgewater Associates founder Ray Dalio. He's warning that we're in an AI bubble that will eventually burst. Here he is speaking with Bloomberg's Danny Berger.
A very small percentage of the population is going to do unbelievably, and a lot of people won't. So what do? Can we work together politically to deal with those issues, and how do you do it? I do not believe, I'm not optimistic on us working together to solve.
So what's the end? Is it a bubble that bursts eventually?
I think it is, yes.
Let's bring in our team. Our markets reporter Anthony Stevens and Chief North Asia correspondent Stephen Engel are here in Hong Kong. Also joining us out of San Francisco is our Bloomberg Deals editor, Michael Haitha. Anthony, I'll start with you. It seems like we thought we could be seeing some positive headlines even around Iran and but right now we're seeing a bit of a sell-off here. Is it Broadcom to blame?
Yeah, we had Steve come back from Taiwan and the markets are dropping, right?
Yeah, still on the news. Steve is back.
Out of jokes, I think the Broadcom result and guidance is quite interesting. It is very strong, but in the press conference or the press briefing, analyst briefing, they touched on the fact that they have supply constraints. So, any guidance that doesn't include the word parabolic is punished by the market. But you're seeing their suppliers trade quite mixed, actually, in Korea and Taiwan. The people that benefit from their increased capacity are trading higher. So the picture coming into today in tech is quite a bit mixed. In terms of tech, though, it's facing this rates headwind now as the kind of momentum slows down. Speaking of Computex, NVIDIA has traded right back to where it was before Computex. So markets are asking a question, right? Okay, now we know how far the growth is going, but this growth is inflationary. To what extent is it inflationary and how much of that has to be priced, right? And on top of that, we have, as you guys touched on, the liquidity problem. A lot of the upside and the excitement around AI is now going into these IPOs.
And we have EMFX and Bitcoin also under pressure as well. What is driving this?
Yeah, the competition with the dollar is now facing a big headwind, right? Anything that has to compete with the dollar is struggling. The jobs data has come out back to back between private and public, very strong. The wage debate, yes, has to be resolved, but the U.S. job market is very strong. So this takes a leg away from the wash plan to cut rates. At the very least, they're holding rates. Now, in EMFX, the fact that oil is still above 90 is a big problem for countries that do not have a semiconductor kicker, right? And you're seeing this consistent pressure, Indonesian rupiah, Indian rupee, Philippine peso, but even stuff like the Korean won, Taiwan dollar, there is no space for error. And I think Indonesia is the biggest example of that. They had that wobble with MSCI and FTSE, and they've gotten relentlessly punished for it. There is no space for error.
Thanks, Anthony Stevens, our Bloomberg Markets reporter. Let me bring you in, Steve, because we have DeepSeek looking to raise $7 billion in funding. Just tell us more about this deal and who's involved in it.
Well, it's a significant deal for, of course, a company that was just founded in 2023 and is being credited, of course, for the DeepSeek moment for China's, AI, comparable AI at a lower cost and continual open source model. That's DeepSeek, of course. Their big investors are Tencent and CATL. So we're hearing from sources that they're close to finalizing this deal to raise about 50 billion yuan, that's $7.4 billion US dollars from those investors, including Tencent, also from the founder, Liang Wenfeng, is one of the biggest startup financings China has seen. And I mean, the whole movement, all the little dragons in Hangzhou, it's kind of lumped under the umbrella of the DeepSeek moment. And that's what they're going to continue to do, prioritize groundbreaking AI research over short-term commercialization. And that kind of pivots nicely as well into the discussion because Chinese AI developers are facing the same kind of pressure the U.S. AI developers are. When are you going to start improving the bottom line?
Yeah, especially when you talk about token costs and the like here. Okay, Steve, great stuff. Yeah. Thank you. Our Chief North Asia correspondent, Stephen, just coming back from Computex here. And
Gen Sanity moves on
Gen
to Korea.
Yeah. Korea, and also DeepSeek, hopefully. Yeah. Let's talk about SpaceX, right? We're going to move on to that big IPO here, officially filing for its IPO and aiming to raise $75 billion in its biggest listing ever. Let's bring in Michael Haitha. I think he's been tracking all this and all the headlines that have been crossing from San Francisco. Michael, it's great to have you. So we officially got the filing. Anything that we learned that was new?
A lot of it was just confirming some of our previous reporting, including that $75 billion number, which is just enormous. Just to put that in perspective, keep in mind the largest previous IPO was $29 billion by Saudi Aramco a few years ago, and next after that was Alibaba back in 2014 at $25 billion. So it's a lot of money, and to build on the previous conversation, there's going to be a lot of demand and a lot of seeking of investors out there willing to put up a lot of money to fund everything AI and such. And it's important to remember that also SpaceX is largely an AI company now as well with XAI. One of the things that we did learn and confirmed specifically was that Elon Musk, imagine this, he's going his own way and doing things differently than Wall Street conventions. He's selling his shares at a fixed price of $135 each. Normally, the banks would set a range. That'd be a little horse trading back and forth with investors to see what they're willing to pay. But Elon has convinced that he's going to sell exactly 555,555 shares for $135 each to get him to $75 billion.
There is also a lot of scrutiny now around the governance structure of this company, right? And just how much control that Elon Musk has. Is that going to change after the IPO?
No, it'll just be confirmed all the more, really. Anyone buying SpaceX stocks has to be pretty comfortable with the idea that the company is going to be run by Elon Musk and Elon Musk only. The simple fact is that after the IPO, he will have 84.4% of the voting power in the company. So any decision that's made will have to be his, with his approval, essentially. That's because he owns almost all of about 94% of the Class B shares, which have 10 votes each. So he will be firmly in control. There's already some resistance to that notion, but that's how it's going to be.
Okay, so we're set for June 11th, it seems. What do we need to look out for up until then, Michael?
Oh, I think the marketing is going to be pretty interesting. Starting with, we had a report today that Jamie Dimon of JPMorgan himself, JPMorgan's one of the top 5 banks on the IPO, along with 22 other banks, excuse me. And the idea is that he's going to be having a simulcast presentation and discussion with the wealthiest investors who are clients at JPMorgan to pitch them directly on SpaceX shares. I think this goes a long way to whether, if there's really that much demand for that many shares out there, and what happens if SpaceX can only sell less than 555 million shares, if it only sells 400 million at that price. That's possible. I'm not sure what happens at that point, and it'll be interesting to see how it plays out. Keep in mind there's a large retail component too, that they're trying to reach out to not exactly perhaps mom and pop investors per se, but people who are normally in on the ground floor of an IPO and don't normally get to buy the shares before they go public.
Michael, obviously this is going to make Elon Musk possibly close to a trillionaire, but also many of these Trump administration officials are also going to get rich from this deal.
Yes, they certainly are. It is an interesting point. Obviously, Elon Musk is not free from politics in any sense. Keep in mind he was very active in the Trump administration and literally running the cost-cutting effort called DOGE. At the beginning of the second term of Donald Trump. They're investors, they have the money there. Keep in mind, SpaceX does a lot of business with the government. Its prime contractor is, the Defense Department and NASA. So there's important links there and business links to it. And that will certainly be important going forward.
Michael Hytha, thank you. Our Bloomberg Deals editor joining us out of San Francisco. Before, of course, June 11th, where we see liftoff for SpaceX. Still ahead, Chinese stocks will be in focus as we discuss Citi's cautiously optimistic, they say, when it comes to the outlook for the second half of the year. Pierre from Citi will join us in just a few moments away. We're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show. Futures are lower here this morning out in China. We're down about 0.6%. The rest of the region also seeing a bit of a sell-off here. And that's despite some of the Iran headlines and even oil prices that continue to cool down here this morning. We're down about 1% for Brent this morning, Minmin.
Yeah, and Israel and Lebanon have agreed to implement a ceasefire if Hezbollah also stops hostilities. The deal comes days after a tense call between President Trump and Benjamin Netanyahu as Washington pushes to keep truce talks with Iran on track. And joining us now is our Bloomberg managing editor, Joe Disses. Joe, just tell us, how strong is this ceasefire between Lebanon and Israel?
Well, I think at this point, Minmin, the way to look at this is, first of all, this is sort of a precursor to any sort of larger deal between the U.S. and Iran, right? Because at this point, Iran has made any kind of talk of a broader truce contingent on the idea that Israel stops strikes against Hezbollah targets in Lebanon. Now, as for how strong this particular deal that's just been announced is, again, I think that contingency that's outlined in there, this idea that it's contingent on Hezbollah stopping attacks as well, is sort of the piece of this, right? Because the statement comes, it's a joint statement from the U.S., from Lebanon, from Israel, and Trump has said that he's actually talked to Hezbollah leaders earlier this week, but ultimately that's sort of the contingency here. And I think, as we've seen over the past several weeks, months at this point, Minmin, a lot of this continues to be very fragile. We've seen, sort of fits and starts of different attacks involved here. So whether this paves the way to that broader deal that we've been talking about again for months at this point, I think remains to be seen. But this is sort of like that sort of slow inkling of progress.
Tell us what happened overall in the House, right, with this war powers resolution as they try to kind of halt any sort of military action against Iran.
Yeah, so at this point, the House of Representatives has passed essentially a symbolic measure attempting to end the war. Now, still have to go through the Senate. There's also some sort of legally questionable aspects of this resolution that the House has passed. But I think there's a couple of things in there that really kind of illustrate to you how much, sort of the tide is turning a little bit in the U.S. In terms of sentiment against the war. Chief among that is, first of all, this is like the fourth time that Democrats have really forced a vote on this issue in the House of Representatives. But it's the first time of those votes that 4 Republicans in the House have actually joined the Democrats. So that does indicate to you that there are some members, maybe just a handful, but some members of Donald Trump's own party that are willing to cross the line here and join these Democrats and sort of, forcing this vote. Now, again, I think as we sort of progress through the year, the war has been dragging on for several months now. They're really, really eyeing those midterm elections in the United States in November as something that, everyday Americans are wondering, problems with inflation, price increases, all of that kind of feeds into concerns about the war. So again, whether that indicates that broader shift in sentiment, we'll have to see. But I do think that particularly those Republicans turning and voting with those Democrats is pretty significant here.
We did see a resumption of hostilities overnight, though, in what is now, I think, the worst sort of flare-ups that we had seen since the ceasefire. But President Trump is still quite optimistic that maybe a deal could come through this weekend. Do we know what Iran thinks?
Yes, I mean, at this point, that's right. I mean, you've had, some of those strikes sort of dragging Kuwait into the situation here. Some of the most significant flare-ups that we've seen since that ceasefire between the U.S. and Iran was announced back in April. Now, again, yes, Trump is going to continue to project confidence. I'm sure that this the ceasefire that he's just announced with Lebanon and Israel, again, based on those contingencies involving Hezbollah, is going to sort of drive him to be a bit more confident there. But again, it really does come down to, whether or not we actually see, that end involving Hezbollah here. And then with Iran, again, just all kind of is up in the air here. I mean, they've been really sort of hesitant to get involved in those truce talks again because of their concerns about Israel resuming those strikes. So we'll have to see whether or not that actually comes through this weekend. But I mean, we've been hearing, peace talks coming through every weekend for I think the last 4 weekends in a row or so. So, it remains very fragile at this point.
Jill, thank you. Jill Deese is there, our Bloomberg managing editor, on the latest when it comes to Iran. We are kind of now, of course, just 8 minutes away from the opening of trade in Greater China. Right now, we are seeing in terms of your pre-market, we're looking like this, right? So Hang Seng is seeing about 170 points to the downside. Futures are still pretty deep in the red here. We're down about 0.8%. Yields are pretty steady here in the 10-year. 677, though. We saw one of the biggest drops in weeks when it comes to the renminbi after announcements of these new tariffs that were being proposed by the U.S. Also, with the dollar now strengthening once again. We got plenty more ahead. This is Bloomberg.
Welcome back to the China Show. Here are some of the big stories that we're following in Greater China. China has expanded its outbound investment regulations to explicitly cover individual investors for the first time. That could raise compliance hurdles for tech founders and ordinary stock investors. The regulation does not spell out how individual outbound investment will be supervised, but instead says the government will draw up specific measures later. Robotics firm PaXini is said to be considering a Hong Kong IPO. Bloomberg has learned that the BYD-backed company is working with banks for the potential offering and may file its papers soon. The size and timing of the IPO are yet to be decided. The Shenzhen-based company's valuation was just under $1.5 billion after a fundraising round in March. The US and its Five Eyes intelligence partners say Chinese spies are using websites like LinkedIn to recruit assets. A joint statement accuses Beijing of targeting nationals with security clearance and military personnel, including those stationed in the Asia-Pacific. The warning illustrates continued concern about Chinese spying in Washington and among its allies.
All right, your pre-market is looking like this here. Continue to see a bit of downside here as we track the reopening in Korea and really started things with a slump there. Futures are really deep in the red here. We're down about 0.9%. Hang Seng is also lower by about 0.7%. It seems like tech is driving that lower here. When you even have some of these Taiwan names, which are very much computing like, Lenovo like, are also falling. We might see that similar read-through when it comes to, of course, HS Tech here today. We're steady when it comes to the currency, but yes, we're holding on to some of the losses that we saw. That fix just came out here also was weaker than estimates there. In terms of stocks to watch, it's still the chip space here, and yes, we are even seeing the domestic names falling more than 1%. SMIC and Hua Hong Semi here today. Also tracking when it comes to copper stocks. Some of these miners out there also seeing some downside here. The open is next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets. We are seeing things retreat a little bit when it comes to this risk rally here when you have the likes of even some of these AI big names in Korea coming back from that holiday, seeing a bit of a slump here. The Korean won, one of the biggest movers to the downside here today with this dollar strength coming back in a big way in some ways. So certainly a lot of headwinds, I guess, for people that are along these markets and along the whole AI trade today at least.
Yeah, it's really the double whammy, right? You have the Broadcom slump overnight that is dragging the tech indexes and some of the big tech names in Asia feeling that contagion effect as well. And then you have the fresh wave of geopolitical risk coming off Iran as well, with those fresh hostilities overnight, some of the worst violence that we had seen since the ceasefire in early April. So we did see that oil was gaining overnight, although we did get a bit of relief this morning after the headline coming out that Lebanon and Israel is agreeing to a temporary ceasefire here. But you take a look at how we are opening in mainland China markets, and we are deep in the red here. Even the Chinex index, which which has been really outperforming the market, is seeing a slump of about 1.2% here. You take a look at, of course, the consumer names, Quito, Moutai, Medea, these are all in the red, and Cambricon as well, tracking what we're seeing in the rest of the region in Korea and Taiwan, lower by about 1%, right? And it's also spilling over into the commodity space. You take a look at copper, down by 1.2%, and there you go. Shanghai crude is still up about 0.4% here. You flip the board, you take a look at what's happening in Hong Kong as well, and if what we're seeing in the rest of the region is any indication, we're likely to see, yes, a bit of a downside here as well on the Hang Seng Tech leading declines here by 1.2%. We are seeing a bit of a green there when it comes to Tencent, right? We're seeing that perhaps a bit of that optimism around that new AI agent that they are launching, but the rest of the big tech names like Alibaba, Baidu, Meituan are all also in the red here. And yes, dollar yuan also pretty flat, I would say, this morning.
Look at Lenovo. There you go. This was the massive sort of re-rating story. So even when the fact that even Lenovo isn't doing quite well here today, it does goes to show how, I guess, people are taking a bit of a breather when it comes to where this AI story moves on from here, right? So everything from oil stocks, obviously we've been tracking that given, we have seen a bit of movement when it comes to oil prices. We're mostly lower here this morning, as Minmin talked about here, the ceasefire between Lebanon as well as Israel. And then you have copper stocks as well to watch out for, given that we have come off in terms of some of the rallies that we've seen in the commodity complex of late. Let's talk things through when it comes to equities here and bring in Pierre Lau, Citi Research China Equity Strategist. He's here in our Hong Kong studios. Pierre, it's been tough being a Chinese equity strategist, I believe, all of this year. What does the second half bring?
Okay, now second half, we are quite selective. I think it's important to know that the whole world, now not just China, but also other part of the world, technology is the key investment thesis. So definitely we are upbeating on tech, which is fast growing. And also this is something the most important or top priority in Chinese government 15th Five-Year Plan. And on the other hand, we are not expecting much massive China economic stimulus. China GDP growth in first quarter was 5% at the high end of the full year target between 4.5 to 5%. So that's why second half this year, we are quite selective. We do like tech, and beyond tech, we do like export, and also IPO will be something that will be interesting in second half this year.
Yeah, a lot of interest in these IPOs, right? But at the same time, it's almost seemed to be sucking flows away from Hong Kong. What do you think it would take for flows to return?
Well, I think for flow to return, again, it's more related to a certain specific sector because anyway, people are just interested in tech. So if you look at the HSI, if you exclude internet, we only have 3.7% of the HSI ratings belong to tech. And this is very low compared to, for example, 15.7% in CSI 300. So it's not surprising that if you look at Hong Kong market, people are quite selective. You just talk about Lenovo, something like that. So we are not playing the whole market. People are interested in some specific area. And in terms of fund flow, you can expect that some fund flow to move back after the IPO. But it has to be sector specific.
So you're still leaning towards the A-share market, if you had to choose between A and H now?
Definitely, because A-share market, not just because of high rating on tech, but also in terms of interest rate environment, is also more favorable. You look at PRC, 10-year government bond yield is quite low, just 1.7%. And on the other hand, the U.S. 10-year Treasury talk about something like 4.5%. So the liquidity in the A-share market is still quite ample, and that helps to support the A-share market.
And we do have the Trump administration now looking to re-erect this tariff wall, right, on a lot of countries, including China. What do you think is the impact on corporate earnings in China?
Now, trade is an interesting topic, and obviously it's related to China export. But in terms of China export, now the geographical risk has been reduced sharply. If you look at first quarter number, China only have 11% export to the U.S. market, and that was only half compared to 21% 10 years ago. And meanwhile, we have more than 50% of China export to those countries called One Belt One Road area. So in terms of geographical risk related to China trade, I think has become much lower compared to the past.
How do you invest around the export theme? It used to be EVs, but it seems like it could be a lot of AI-related, tech-related things now.
Yes. Now, last year, 2025, China had 61% export related to machinery. So machinery would be the key investment thesis for export. And the things that China export now is migrating to upper high-end product. So that's why machinery account for a very big part. And also China is quite unique, having the full value chain in a lot of industrial productions, which is something difficult to be replicated in other countries. So that's why I think machinery, heavy machinery-related automations, these are the things empowering China export.
I was going to get your take on the Trump administration proposing new tariffs now through Section 301. Could this continue could it weigh on the export side of things, do you think?
I would say that the US-Thai trade tariff would continue to give turbulence in the stock market. But I just mentioned, China export now only 11% go to the North America area.
True.
So it is not so significant compared to the past. You look at China export number in the first 4 months this year, it was up 15% year on year. Obviously, it's much better than most people's expectation. And when we talk to the Chinese government people like Ministry of Commerce, they are confident about China export. So that's why we do think that second half this year, China export will continue to be better than market expectation.
But if we continue to see this geopolitical premium being built in and oil remaining elevated, which sectors do you think would be most exposed?
On the cautious side, we are cautious on consumer. Consumer, I think, is still dragged by the property price decline in China, high unemployment rate for the young people. Within the consumption space, we're quite selective. We do like, say, medical, beauty, elderly services, tourism. These are the few areas that we like in consumptions. Other aspects such as auto because of price cut. So overall, we are still quite cautious. So there are still some areas that we are cautious. But on the flip side, we are most positive to tech, some basic material like copper, aluminum. These are the things that we are more positive.
In terms of the AI trade in China, the hyperscalers have underperformed. And there's this kind of very violent rotation, whether it's optical receivers, whether it's computing stocks, whether we talked about the Lenovo re-rating story. Do you think investors should continue to chase or rotate? I mean, how do you rotate, given how violent this is?
I would say that when we talk about China tech, in fact, we also need to be aware of the product. For example, if you look at the so-called China Tech Index, it includes a lot of internet stock. Are they really tech? So these are the areas that we classify under internet, but not tech. For tech related to those high-end and with global presence, more export, these are the areas that we are still upbeat in second half this year.
So when you mentioned these internet stocks, right, the big blue chip stocks, or what used to be the blue chip stocks, what would it take for them to really catch up in terms of valuation when it, relative to some of the Korean and Taiwanese peers?
Well, I think investors are very smart. They do know the underlying business, where are the major profit source of this internet name. I mean, some of them, you can say that they probably are more consumption related rather than tech related. So from that perspective, I think there's something different compared to the so-called tech name in Taiwan.
Do you get asked about Taiwan and Korea a lot?
I do cover Korean name as well.
You do?
So something like the transformer maker in Korea, they are very popular. So these are the companies that they do benefit from the global strong demand, and also majority of their product to the U.S. And these are companies making good money.
Talk to me about insurance. I know you just upgraded that to overweight. What's behind that call?
Two reasons. One is we are expecting insurance company getting more investment gain from the equity market. That's pretty obvious, in particular related to tech investment. Secondly, we because of the very low interest rate in mainland China, so we are expecting more migration from bank deposit into insurance product, which is favorable to insurance company.
So would you still be would you still position yourself for some of the defensive banking stocks then?
I think for banking stock, probably is more attractive to domestic investor in the Asian market rather than in Hong Kong. I mean, we can do nothing, just buy the U.S. Treasury. You can get 4.5% interest rate. So That's why for you play in Hong Kong, I think we do have higher hurdle in terms of attractiveness because of high interest rate in Hong Kong. I would say that at least 6% yield is essential to call it you play in Hong Kong. But for PRC mainland market, because of the very low interest rate, so a lot of banks could provide something around 5% dividend. That should be attractive to domestic investors in mainland China.
It's interesting you cover Korea. I mean, we've seen, I think, $70 billion of net outflows from foreign investors in this market here. And it's starting to disrupt even the currency in some ways. How should I be looking at this market now? Do you think that can a very steep, a narrow rally be durable if you're talking about only a few names?
Well, we are aware that the recent fund flow, I think part of the recent fund flow is because of the big IPO in the U.S., so some money flow back to the U.S. market. And for the Korean market itself, I think the fundamental, from Citi perspective, we are still positive to it, and in particular those related to tech, related to the transformer space. These are the areas that we are expecting the positive cycle to continue, not just this year, but also next year.
Pierre, thank you. Pierre Lau there, China equity strategist at Citi Research, joining us here in our Hong Kong studios. A look at how Asian markets are doing as we go to that break, and we are continuing to see when it comes to equity selling here today across the board. CSI 300, MSCI China. There are still pockets though of tech that still could be outperforming, but there is quite a bit of fierce rotation going on as well. Benchmarks though are mostly lower this morning. HS Tech down more than 1%. This is Bloomberg.
All right, we are watching this TSMC AGM that is happening right now, and you have the CEO, C.C. Wei, speaking at the shareholders meeting, and there you go. Take a look at the shares now, down about 1%. The CEO saying that TSMC's shares will continue to rise and that the company is confident it will continue to grow in the next few years. TSMC also saying it is not using ASML's high NA, that is a high numerical aperture in chip manufacturing, referring to some of these extreme ultraviolet lithography machine. Yes, the CEO there reiterating that TSMC's shares will continue to rise, although we're seeing the opposite here on the share price right now.
Well, it hasn't been a TSMC story for Taiwan for some time, right? It hasn't been doing as well as maybe other parts of this tech sort of AI trade, right? When you take a look, how the likes of MediaTek and some of these other names, and where investors have shifted their focus, and mostly because they've been forced to, right? As you mentioned, like victims of their own success, and really a lot of foreign investors are either going to have to be, looking at other parts, maybe less appealing parts of this AI trade, or just avoid over concentration altogether. But it's interesting what he said about, reducing the reliance when it comes to ASML and some of those lithography chips because of costs, they say. So that certainly is one reason. And then they've been talking about the demand picture, right? They won't catch up with demand in a long time, very similar to what we've been hearing from some of the CEOs out of Korea and some of the memory names as well. So that is what they're saying here right now, and they will continue, and confident that AI continues to grow over the next few years as well. Shares down some 1%. Let's talk a bit more about, of course, listings, IPOs here in Greater China. BYD-backed robotics firm. Let's talk about this one. PaXini said to be considering a Hong Kong IPO, and sources say it's working with banks on the potential offering and may file with exchange in the coming months. Let's bring in our Asia Equities Deputy Managing Editor, Balazs Pence, for more. So what do we know about the robotics space in China and the pipeline now?
PaXini is an interesting case. This is a company that raised about 1 billion yuan a couple of months ago. It's valued around 10 billion. BYD is one of the backers, as we heard. JD is another backer. They make these very dexterous robotic hands, which is one of the kind of bottlenecks in this industry that we've heard about. But it's really just emblematic of this wave of robotics companies that are poised to come to the market. There are about 50 IPOs lined up in the pipeline just for Hong Kong, which just shows how much interest there is, how much enthusiasm there is around this market. One interesting company is Unitree. We, of course, all saw the Kung Fu robots a couple of months ago. That's the company that makes them. They just got approval for Shanghai IPO this week. So that's coming to the market as well.
Why are all these companies all coming to the market right now, though?
Yeah, that's an interesting one. I think there are a couple of reasons. One is China tech is actually really, really hot. We saw this wave of AI-related IPOs, chip makers and model makers and component makers come to the market over the past 6 months, and they've done very, very well. We all remember these humongous first-day pops, hundreds of percent up, and these stocks have been doing really well. So obviously the robotics makers are looking at this market and thinking we can do the same as well. These are companies that have huge funding needs. They're in a different place of their product cycle right now, so they do need to raise money, and they think that this is a really, really great opportunity to do that right now.
How should we look at valuations of this space, right? Some are pretty expensive here right now. Do you think, and I mean, these are companies that are also burning a lot of cash. What are valuations looking like now?
That's going to be a really, really interesting question when they actually do launch their IPOs. How do investors think about these companies? On the one hand, they might think you can't miss out on them, right? Like the market is so hot, you got to get in, you got to grab those gains. On the other hand, like you said, these companies are burning cash right now. A lot of them are not very profitable. And in a lot of cases, the use cases are not really clear. We're not really sure how these products are going to sell on the actual market. So it's going to be very, very interesting to see whether they can match the valuations of those AI companies.
Thank you so much, Bloomberg Asia Equities Deputy Managing Editor Balas Pence there. And now to other top stories that we are watching in the tech space. Broadcom shares fell in extended trade after the company delivered a disappointing forecast for AI chip revenue. It sees the third quarter AI sales of $16 billion, where analysts had expected $17 billion on average. The full-year forecast of $56 billion was also shy of estimates. Broadcom says it's making progress with AI customers, including Alphabet, Anthropic, and Meta. CrowdStrike shares also dropped in late trade after its second quarter revenue outlook failed to impress investors who have bid up the price in recent months. The cybersecurity provider met analyst forecasts for projected revenue and adjusted earnings of up to $1.17 per share. CrowdStrike stock had risen 59% this year. Google parent Alphabet has increased the size of its equity raise to around $85 billion to help fund its growing AI spending plans. The offering includes a $40 billion at-the-market program and a $10 billion deal with Berkshire Hathaway. Alphabet is aiming to capitalize on growing demand for its homegrown AI chips known as TPUs as it ramps up capital expenditures to record levels. And you can rewatch any of our segments on the Bloomberg Video Hub. Subscribers can explore live streaming, news, and interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. Check out bloomberg.com/videos. This is Bloomberg. Welcome back to the China Show. Here are some of the other major corporate stories we're following this morning. Bloomberg's been told that some members of the billionaire Glazer family have been debating whether to sell their stake in English football giants Manchester United. We're told the family as a whole has not made a decision to exit, and different family members are still discussing the best path forward. The Glazers' more than 20 years of ownership of the club has often been blighted by fan protests. Bill Ackman is looking to sell his stake in Universal Music Group just days after the world's largest music label rejected his takeover bid. The sale would raise around $1.7 billion for Ackman's Pershing Square at the top of a marketed range. The source says Ackman is expecting a profit on the transaction of more than $600 million. Now for another check of markets, we are looking at some of the big movers on the Hang Seng Tech here. And yes, we are seeing downside on some of these names here, Lenovo, Meituan, and BYD, right? Getting hit by that Broadcom-led slump across the tech sector here, Yvonne.
Yeah, I mean, Lenovo's down some 4%. We were talking about just the technicals of that stock itself was already seen as overbought. This really kind of brings us back to levels that we saw, May 29th, so maybe like a week ago. Take a look when it comes to Meituan, though. Continue to see when it comes to as we've been talking about, right? The internet platforms, food delivery, still looking at like the weak side of this market. It's interesting too with SMIC, though, the chip space is still looking a little bit more resilient against some of these other big names. And you are seeing some pockets, as you mentioned, of still things looking well. When you take a look at optical stocks, for example, in China, right? Perhaps this is still sort of that NVIDIA, Jensen Huang effect, a Computex effect, but you are still seeing some decent gains here for some of these optical stocks here this morning. In terms of the dashboard, the benchmarks are looking a little bit weaker on the China side as well, so certainly we're watching very closely. The renminbi also has been holding on to some of the weakness after, of course, this dollar story comes back in a big way here once again. So we are seeing when it comes to mostly red across the board here this morning. Iron ore, some of these commodities are also falling here as well. Yields are pretty steady, though, when it comes to CGBs here this morning. And we're tracking, of course, Taiwan hardware stocks as well. We just had the CC Wei of TSMC talking in that AGM about, the demand picture, they say, could still continue for a few years as well. But yes, TSMC shares are a bit lower here this morning, but we are seeing some of these Taiwan AI adjacent names like Quanta, like WeWin, are seeing some substantial downside here this morning. The one market to watch, I think, is still around the EM space, right? We talk about the tech dispersion. We talk about what's really kind of are still the winners, Kospi, Taiwan. But on the flip side, it's the likes of Indonesia. It's the likes of India that continue to underperform. Yesterday, we saw a massive drop when it came to the JCI here. The rupiah also sinking as well. So once again, you talk about the energy aspect of it, the dollar strength coming back in a big way, and Indonesia certainly has been hit by it pretty hard.
Yeah, Indonesia and some of these EM currencies, right? Vietnam as well hit pretty hard. And it's really all these Southeast Asian countries that are very export driven that is hit hard, and they don't have the AI insulation as well. We'll have more in the way, a lot more in the way in the next hour. You're watching The China Show.
Welcome back to the China Show. A look at the CSI 300 a half hour into the session, and we are bouncing off some of the session lows here, but still we're underwater by about a fifth of or 10th of 1% here. Looks a little bit better against the grain when you take a look at how the rest of the region is faring here today. When you have Korea markets coming back, and now we thought it was going to be a catch-up story given some of the news that came out through Computex in Taiwan, but it seems like right now we are seeing a slump on the Kospi of about 2% here. Taiwan also matching that sort of pressure here. We're down about 1.2% on the TAIEX. That's despite the fact that Goldman Sachs' Tim Mo and his team upgraded both of their forecasts, or at least targets for those, right? So I think they were saying 12,000 for the Kospi, 51,000 for TAIEX here. So they're seeing double-digit upside still at these levels. On the flip side of things, we are continuing to see when it comes to the currency, when it comes to EM. I mean, it's very bifurcated, as we say, right? And you take a look at the haves and have-nots in the AI trade, and really what you are seeing is the likes of Indonesia, it's the likes of India that continue to underperform in the EM complex. And FX markets have been moving quite a bit here, as we talked about here with the rupiah around those record lows. We've broken, we're near at least that 18,000 level. Korean won is the one that is seeing a little bit more gains here this morning, but really there has been some concerns about maybe now intervention watch, not just with yen, but also with Korea. When we heard from officials, they were talking about excessive one-way moves. This is a currency that has not benefited from equity inflows here, despite the Kospi being so hot, right? So that's one thing to watch. You also, those Ueda comments that came out yesterday about, signaling where things are, and maybe potentially the market is prime for maybe a hike from the BOJ as early as this month. Didn't do too much to sway the yen, though. I mean, we're strengthening just a tad. We're still talking about 160 pretty much. And so we are watching if we see some signs of officials there taking any action. 677, we're holding on to maybe a little bit more strength, but yeah, one of the probably weakest drops or biggest drops we've seen in the renminbi in weeks. You take a look at when it comes to the haves and have-nots, right? And when we talk about how divided the EM story is, right? And you kind of have to kind of do it in different packs, right? Those that have been very much exposed, the picks and shovels, and you talk about the Taiwan story, to the Chinex, right? Where you are seeing these kind of new pure play AI players that are actually listed in Shenzhen. That continues to be an up arrow story. And the flip side of it is the likes of Jakarta, it's the likes of India, which are markets that are still dealing with a lot of the Iran impact as well, whether it's higher energy prices, the dollar strength that is continuing to roil their currencies here with the rupee and rupiah that certainly have been some of the worst performing ones this year. So where does it leave when it comes to EM stocks? They retreated from these record highs as fresh Middle East clashes cloud hopes for a peace deal. Let's bring in our senior Asia equities reporter, Abhishek Vishnoy, joining us now with more. Interesting too, right? Despite the fact that we had some maybe more positive signals when it came to Iran, with Israel agreeing to a ceasefire with the likes of Lebanon, you're still seeing EM come off a little bit here right now. What do you think is driving that?
I mean, I think it's just a little bit of profit taking, and the chart you had on the screen that sums it up pretty nicely. If you zoom out and look at the EM complex, Korea, Taiwan obviously are the leaders here, and China is also making a little bit of comeback. There is an issue, or specific issues, country-specific issues in Indonesia and in markets like India, and Iran war-related concerns are exacerbating the issues in those two markets. But I think overall, the MSCI EM complex on the equity side at least can live with it. I mean, it lived with the China uninvestable tag, went through it, and it can digest this as well. If you look at the valuation and earnings picture, MSCI EM is trading at about 12 times. That's actually cheaper than 14 times where it was a few months ago, a few quarters ago probably. And if you look at on the earnings side, after Korea, MSCI EM is the index which is seeing the biggest upgrades, largely because of Korea and Taiwan again. But there are other, markets like China as well, which are participating, especially the new China aspect of it, exports, EVs, tech, AI. To look into it a bit deeply, you look at how the index has done in previous episodes. So in the pre-GFC era, the trough to peak rise was way more than what we have seen from the recent lows. So, it doesn't look very stretched at 12 times earnings and 38% EPS revisions. And now, if you look a bit deeper in other assets, currencies are taking a bit of toll. So the economy is getting reflected in the currencies. Most of these currencies, except Chinese yuan, haven't done well since the Iran war started. But on the equity side, it doesn't look stretched at all. There might be a little bit of profit taking and all, but if there are risks out there, they are not being priced in right now.
You mentioned Indonesia. I mean, we mentioned some factors as to why we see JCI was slumped to a 5-year low, the rupiah dropping to a record as well. I mean, there's the energy aspect, but there's also a lot of the domestic sort of issues that are really weighing on this market. And I think it's one of the worst performing ones this year. What's the outlook for Indonesia moving forward now?
So, that's really interesting. And if you look at the timeline of the new regime that is there in Indonesia for the past several years, I think that'll speak it all. I remember we did a story saying how, the new regime wants to emulate China's rise and China's policies. But, without China's heft, it really becomes a tall order. And if you actually put everything under a central authority, which started with Danantara Sovereign Wealth Fund, and now it is going into exports of commodities, that essentially has spooked a lot of investors. And if you look in that context, that is, the big issue with Indonesia's and Iran war is now exacerbating their fiscal issues as well. Rating agencies have been talking about revising their outlook. There have been speculation in the market. So all in all, that is really weighing on Indonesia. Like you were mentioning a while ago, JCI is at multi-year lows. Rupiah is near or at record lows. That really reflects the issues that economy and markets are facing. And to some extent, this really shows and sums up, how some investors was talking about that, it looks like the big short or the big funding source to go into other markets now. It looks like a balance sheet error on MSCI emerging market. It looks like the new sick man of Asia that Philippines was, several cycles ago.
Yeah. Still looking for, those catalysts there for Indonesia, it seems. Abhi, thank you. Our senior Asia equities reporter, Abhishek Vishnoi, joining us out of Singapore. Now to a Bloomberg scoop here. We've learned that China's DeepSeek is close to raising $7 billion from investors, which include the likes of Tencent and CATL. Let's bring in Stephen Engel, our chief North Asia correspondent, fresh off Computex. And now back in Hong Kong. Yeah. Still looking fresh. I know you've had a very long run of travels.
I don't know how fresh I am.
You still look
fresh of mind, for sure.
Yeah. What do we know about DeepSeek?
Well, DeepSeek, but just coming off to Taiwan, and we just saw all those charts on Taiwan. That's stock market over the last year is up 112%. You feel the optimism on the AI, on the back of the AI boost, the Gen sanity, if you will.
Did you feel it too? While you
definitely
were there?
felt it. Definitely felt it, because these are the component parts makers of the AI ecosystem that are all just skyrocketing right now. So there's lots of optimism. But in China, there's optimism as well with all their AI little dragons, if you will. DeepSeek was really the one that came to the fore just a couple of years ago, or actually was it only last year? My goodness, the DeepSeek moment. Yeah. The company's only been around really since 2023. It's really built a reputation for cutting edge innovations, but also, having really the comparables to the American counterparts has been pretty significant at a fraction of the cost. And they're going to continue to be open source and the like, and developing to the ultimate goal of AGI, artificial general intelligence, which is the ultimate goal, no doubt. But now we're hearing, and this is really a milestone for China's AI push, they're close to finalizing a deal, according to sources close to the matter, telling Bloomberg, to raise about 50 billion yuan, $7.74 billion US dollars. It's a sizable amount for such a young company. Yeah. And, it's one of China's, if not China's largest startup financings. And we're talking about term sheets, according to the sources, being sent around and signed by the key investors like Tencent, like CATL, like the founder, Liang Wenfeng, and also the state-backed National Artificial Intelligence Industry Investment Fund. They need to shorten these names of these administrations. But anyway, the National Artificial Intelligence Industry Investment Fund also taking a part in this this fundraising for DeepSeek. That indicates a major backing by the central government.
Obviously we've seen so much fundraising going on, not just in China, but in the U.S. as well. Like the U.S., a lot of these Chinese players are facing more pressure now to really monetize their businesses, right?
That's right. And you look at even though we just came out of that euphoria from Computex, but immediately after Jensen Huang leaves and the narrative moves on and Ray Dalio says a bubble's forming, the sentiment shifts really quick. Now, there's a different trajectory in China, but every company has pressure when they have investors to start monetizing it and start commercializing it to get a return on those investments. So if they're plowing $7.4 billion, the natural question is, when is the return on investment? What is the timeline? Well, what we're hearing is that DeepSeek will prioritize groundbreaking AI research over that short-term commercialization, keep developing open source models with broader goal, as I said, of AGI, artificial general intelligence, push boundaries of technology over monetization. These are what the sources are telling us, and this is what DeepSeek apparently is telling its investors as they sign those term sheets. At the same time, as we talked about, pressure, of course, is going to mount to have that return on investment.
Steve, thank you. Stephen Engel there, our chief North Asia correspondent. As we, of course, track this whole tech trade and where we are, Bitcoin continues to be a down arrow story. You take a look at what the Bitcoin and cryptocurrency is doing. There you go. We briefly, just now, did touch below that 62,000 level here, which has been sort of a floor for some time. But we're back to basically levels that we saw maybe even before this Middle East war began. So we're extending that slide here today. It's already been a pretty bruising week for Bitcoin itself, right? We've seen the token shed about close to 12% of its value here. And this sort of all began once we heard from Michael Saylor in Strategy, which sold about 2.5 million of its giant Bitcoin holdings. So that certainly is what is leading to that. And really that divergence between what tech has done versus what really Bitcoin has done is quite wide right now. And you're seeing some of the smaller tokens like Ether also down some 2%. 0.5% here this morning. Still ahead, we're going to talk a little bit more about when it comes to tariffs. President Trump puts tariffs back on the agenda using claims of forced labor to target dozens of countries. We'll look at the potential impact on the Chinese economy next. This is Bloomberg. All right, we got, when it comes to levels to watch here on the rupiah, we are now just around that 18,000 level here. So this is the first time we have seen as a record lows for the currency, and really keeping markets on guard now for maybe signs of intervention from the central bank, because a break beyond 18,000, some would say, could actually ramp up some of the foreign outflows here when it comes to stocks, when it comes to bonds. So it's a key test really for policymakers whether they will step in or not. So there you go. It's not just a rupiah story. We're seeing it across EMFX here today. Look at when it comes to the ringgit here as well. The won's doing another thing, but we have been on intervention watch for the Korean won, for the rupiah now, and as well as for the Japanese yen, now that we have reached and are back to around that 160 level. So the dollar rings king here once again here. Also when it comes to renminbi, we're flat, but a bit of weakness yesterday though, 677 for the currency right now. And of course, what happened yesterday and what really kind of broke a little bit of that renminbi rally has been this announcement and these proposals from the U.S. administration when it comes to tariffs, right? Well, China has hit back at the U.S., suggestions that it used forced labor, saying trade issues should be sorted out in talks. The foreign ministry in Beijing was responding to Trump administration's plans for new tariffs on dozens of countries it accuses of failing to combat modern slavery. Products from China would be subject to a 12.5% tariff.
中方一贯反对各种形式的单边关税措施。
China always opposes all forms of unilateral tariff measures. A trade war or tariff war serves no one's interest. Trade issues should be resolved through dialogue and consultations based on equality, mutual respect, and mutual benefit. There is no such thing as forced labor in China, and we oppose using it as an excuse to engage in political manipulation.
Let's bring in our chief Asia economist for Bloomberg, Chang-Shu. She joins us here right now. Tell us a bit more about the global impact. And we were talking about, we're back to this sort of the stage, yes, right, where we're seeing double-digit tariffs across 60 economies.
Yeah, we see the impact is likely to be fairly limited. So bear in mind, this is essentially a replacement of the current. When it's implemented, it's likely to be a replacement of the current tariff regime. The context is when the Supreme Court struck down the IEPA arrangements, the Trump administration quickly rolled out this temporary solution, which is due to expire in July. The administration is trying to find something on the more solid legal footing. So when this goes ahead, the countries that are imposed tariffs will have broadly similar tariff rates, and a smaller number of countries will face 10%, which is the same level as now. Most other countries will face slightly higher arrangements or levies of 12.5%. If we put everything together, the global tariffs might rise by 0.5 percentage points, not massive amounts of increase. So impact limited, but it's unlikely to be the final act. So we have to keep looking, watching this space.
Yeah, I mean, this comes on the back of that Trump-Xi summit where they talked about, the Chinese talked about strategic stability.
Yeah.
Do you think that stability is impacted in any way for China and this whole export engine? I mean, we continue to see export numbers very strong.
Yeah, I think within that global context we talked about, the impact on China is likely to be limited as well. We see China's certainly facing higher tariff rates than the rest of the world. The latest one, if China faces a 12.5%, after the latest arrangements, the tariff rate might go up slightly by 1 percentage point or so. So not a massive increase in absolute terms. And what's also crucial is the gap between China's tariffs and the rest of the world stays more or less stable. China is facing like around 20% of tariffs compared to 10% with the rest of the world. We know China's exports have been staying so robust. I think it's more because the country is producing a lot of things the rest of the world wants. So at this point, we don't think this will affect exports that much.
Chang Shu, thank you. Our Bloomberg Economics chief Asia economist there on the potential impact when it comes to these proposed U.S. tariffs here. Let's cross over to what's going on in San Francisco, the Bloomberg Tech event that's happening there. In conversation right now is Elizabeth Stone, the chief product and technology officer at Netflix. For subscribers, of course, you can tune into this a little bit more as well, but certainly lots to talk about here when it comes to Netflix there, the strategies and all that here. Let's listen in.
Viewing experience, what your preferences are, as well as a way to represent the content that we have. So think about that as if you watched a certain film, you might say, this is a horror film that's maybe kind of kitschy from the 1990s description. Some of the new technologies allow us to do that type of description of the content in a much richer way. So we can marry this rich understanding about the type of content that you love and enjoy with a rich set of understanding about what is this film or TV series or podcast about, with a rich understanding about the world, like what's in the cultural conversation right now, what's trending in terms of focus areas, and then bring that together into an experience that feels extremely personalized and immersive. And more conversational means that you can use things like natural language to say, like, knowing what you know about the type of content I like, and knowing the content catalog that Netflix has to offer and the context that I'm sitting in. Am I watching with my family? Did I have a tough day? Am I looking for a laugh? That conversational experience is powered by that rich context across members' content and the world around us. So that comes to life in things like the voice UI experience that we're testing now, and we've done different tests or beta experiences using your phone and natural language to help search the catalog. That's enabled by a different approach under the hood that you don't always see, but helps to enable the great member experiences.
You've leaned into live. You've got multiple NFL games this year, big NFL games, the Women's World Cup, WWE, MMA. Obviously, everyone hitting play at the same time, Tyson Paul, is so different than I'm going to watch whenever I want. How hard has this been to pull off?
It's easy to look at live and say, shouldn't a company like Netflix just be able to flip a switch and it works perfectly? That's not reality. And I don't think that's not reality for only Netflix. So many companies who've gone through bringing live over the internet versus broadcast have gone through a similar experience. It was really tough. I am glad that we took very big swings early on, though. So that includes things like the Paul Tyson fight, standing in a launch room with the team as we approach 65 million concurrent viewers, dramatically record-breaking. I think it added up to more than 108 million people watching at the same time. When just 6 months earlier, approximately, we had maybe 100th of that size watching smaller events. So it really went from 0 to 100 fast for us. And taking that big swing meant we learned very quickly about where our systems needed to evolve. So a good example of that will be, if you're talking about video on demand, we're able to place those content files very close to where you live, and when you press play, it is sitting there cached and ready to go, and pretty seamless. For live, it's going from the camera to the cloud to the content delivery network to your device in almost real time, and there is no room for error along that path. And the room for error gets very large with a high blast radius when a lot of people press play at the same time. So it's definitely a challenge. We had to rethink a lot of things that we had built over time. Open Connect, which is our content delivery network, has been a huge benefit to have as part of Live. So while it was very highly tuned and optimized for video.
Well, we are seeing declines when it comes to Bitcoin here this morning. You take a look at the cryptocurrency right now. We are now falling around or to that pre-conflict level when it comes to Bitcoin here. And really 62,000 has been that floor. We'll see if we break that. Well, we briefly did dip below that just this morning here. So certainly that's one thing to watch. And I think, with Michael Saylor and what we've been hearing when it comes to strategy, that certainly is what has been the driver of this here right now. You take a look in terms of movers here. Some of these high-flying themes are actually weak this morning. So everything from robotics, from servers, from commodities as well. In terms of the big Asia gainers, you still see some pockets of tech doing okay. Everything from optical stocks in China and the like. So certainly there are still some pick and choose sort of themes here today, this morning. We have plenty more ahead. This is Bloomberg. $11:29 a.m. in Tokyo, and Japanese markets are heading to that lunch break in just a moment. Here we are continuing to see we're extending some of the sell-off here across the region. In fact, Nikkei and Topics are both lower here this morning. So even some of these AI darlings are selling off a bit here today. We are a bit on intervention watch as well, but we've come off from 160. But hey, we're still talking about 159.90 levels here, despite those comments from Ueda yesterday, signaling maybe a good chance we could see a rate hike from the BOJ as soon as this meeting in June. So that certainly is one thing. We're on intervention watch across multiple currencies here this morning, whether it's the yen, rupiah, Korean won as well. And we're seeing maybe yields pick up just a little bit in the JGB market as well here this morning. This is against a backdrop of really a sea of red across most sectors here today, when you are seeing risk appetite being sapped. Really the likes of the dollar coming back in a big way. You look at the JCI Indonesia, after we did break briefly below that 18,000 level for the rupiah, or new record lows there, that is adding to more of that outflow pressure for the stock market, right? We're down some 3% again after dropping some 5% at 5-year lows for the index. So EM continues to be the one painful sort of side of it, the JCI, when you take a look when it comes to India markets as well. But even the tech side of things, like the Kospi today, are also feeling it here. So perhaps now Computex is over. Maybe some all the good news around NVIDIA and Jensen Huang, that sort of effect has been fading a little bit here today. But yeah, it gives us a little bit more time, opportunities to shift our focus away from the AI story, or maybe just the AI story when it comes to the biotech side of things as well, with China's biotech sector, which recently took center stage at the annual American Society of Clinical Oncology meeting. Now, Akeso's Yvonne made history by offering the first ever Chinese data set to command a coveted spot at the plenary session.
The build-up of the deals, as well as the new flood of results, they are very much in favor of the continued boom of China biotech. I think it's encouraging here to see it's not just one drug, one company, but rather a structural output, from China, the whole industry-wise.
We have a lot of confidence that this could benefit for patients worldwide and not just in China. We're very confident that we will be the dominant player in this class of drugs.
And that was Bernstein senior analyst Rebecca Liang and Akeso CFO Bing Wang speaking to us earlier this week as well. And really, despite the data being presented by several Chinese biotech firms, which people have marked was a very big milestone really at this oncology summit, stocks have taken a hit this week as well. So, we had that as sort of a Akeso spike on the back of some of the news. Innovent and Pfizer and that deal certainly did spark a lot of optimism around the space here. But yeah, sometimes, when you talk about tech and really the heated sort of sectors there, that really continues to take a lot of the spotlight away from biotech of late. Joining us now is really interesting, our next guest, who in some ways predicted about a decade ago that China would become the main competitor to the U.S. in biotech. Roeding is CEO and co-founder of Silicon Valley-based cancer therapeutic startup Earli. It's great to have you on the program here. It's interesting. I want to bring back sort of what you wrote back in 2016 about what you saw on the ground in China and how the biotech sector has really evolved in the last 10 years. It seems to be coming to fruition now, your perspective. How do you look at it now, and what do you think the next 10 years brings for China?
Yeah, 10 years ago, I spent a month in China, in Beijing, with my wife and our then really tiny little children of 1 and 3. And the goal was to meet China's entrepreneurs. So I went from very large startups that had already $20 billion market cap at the time, which was Meituan, all the way to the founders of tiny companies and even those sitting in coffee shops wanting to start a company but not knowing what to do yet. And what I took away from that was that China will be the only real competitor of Silicon Valley in the next 10 years. And at the time, I specifically looked at Beijing, Shanghai, and Shenzhen. Well, now fast forward, it's exactly 10 years later, and it's not only in tech, where we have massive competition now on the AI side, but also in biotech. And you just mentioned that at ASCO, you saw Akeso on stage, but it's not just that. Like a day before or two, Pfizer signed a $10.5 billion deal with China's Innovent for 12 different programs. And this is almost like, I would say, a weekly activity by now to announce new deals. So we are seeing an enormous level of innovation. You know, in the old days, people used to call China the copycats. That has been wrong for the last 10 years already. You could see it with DJI drones back then. You can see it with biotech now. China is an innovation powerhouse, and the US has to be very careful in order to stay ahead of the pack or stay at the front of the pack together with China, because it's certainly not alone anymore.
When you take a look at the development or the supply chain that China, has dominated in now, in what ways do you think China dominates, and what aspects of the supply chain do you think China is in some ways surpassing the U.S.? And what's still missing, do you think?
Well, I think supply chain is what people like to reduce it to, but that's really not it. In drug development, the real money is in the innovation. It is in the drug development. It is in the design of the drug. And that's where we see China making leaps and bounds. And quite frankly, this is a geopolitical reality now that, when you talk about each country developing the best drugs in the world, let me put out a scenario. This is not just an amazing situation. It's also a potential problem situation. Because in a competition scenario that we're clearly seeing between the US and China as the two superpowers, there are two different scenarios where this can go either way in a way that we may not want it to go. You already saw during COVID that when there's supply shortage, for some reason or another, your own country comes first. And that is very understandable. So the question needs to be asked is, do you really want to rely on the other country supplying life-saving drugs to yourself, to your own country? And the question was clearly answered by China with a very clear no, when in 2021, the next 5-year plan was agreed, and it showed high-tech scenarios like robotics and biotech all the way in the forefront of the latest innovation and investment by the government. And we're seeing not the same level of investment in the United States. And before you know it, something like biotech could become the next rare earth. In rare earth metals, we've seen it became a geopolitical bargaining chip, and that is not out of the question for biotech either, and we have to be careful of both countries.
So that's interesting, the comparisons that you're seeing to rare earths. So you're foreseeing maybe there's going to be some sort of politics involved. Like, is there any way or any part, world where you see that the biotech sector is going to be politics free?
Let me be clear. I hope that will never be the case. I hope that we will never see the situation that life-saving cancer drugs will not be transferred to the other country for geopolitical reasons. But did we think that would ever happen with rare earths? Probably not either, most people at least. So we have to be careful, and supply shortages can happen too for very normal reasons that we can't anticipate, like during COVID, and each country came first. So what I'm trying to say with that is the United States has to get its act together and move to keep biotech at the very forefront like it used to be. And the more deal making we see from pharma companies from the US, buying technology that's innovated in China, the less innovation will happen in the US because the money is not going there. So there is a very important element here of government support. I would highly suggest the United States does something similar to what China does so well, which is investing in biotech with a sovereign wealth fund, where money actually flattens this funding curve. You may not be so aware in Asia, but there's a huge roller coaster of investment cycles in biotech that's much, much worse than in normal technologies, where suddenly you have no funding for 3 or 4 years, and then you have a boom phase where there's lots of funding. And in the meantime, amazing drugs, they vanish, they go away.
Syria, before you go, I want to ask you about your company, Earli, which I know the platform, you combine everything from AI to cancer imaging, to tell us a bit more about the automation side of things and really deploying AI into your workflow. How does it all work?
Earli is an early cancer treatment company that uses artificial intelligence to create genetic switches. Think of them as in the form of DNA. You inject it into the body, it goes everywhere, but it only turns on in cancer cells. And when it does turn on, it reprograms the cancer cell to become its own factory that makes its own drug. So the cancer cell becomes a factory that makes a drug against itself by activating the immune system to attack and then kill the cancer. Now, that is the opposite of what we do today. Normally, we inject a drug and we have all kinds of side effects because it goes everywhere in the body. And we're trying to limit these side effects by making them as personalized as possible, but it never really goes all the way to working only in cancer. And so we have to lower the dose, and when we lower the dose, you don't see as many effects that we want, meaning killing the cancer. So what do we do instead? We turn the cancer cell itself into its own drug factory by programming it. And for that, we needed massive amounts of AI and machine learning to get there. And by using this AI, we were able to create switches that are now so accurate that not only do they completely get rid of the cancer in mice, but it's also completely safe in large animals, in monkeys. And we want to be in the clinic in humans, in lung cancer patients, by summer of next year with this.
Fascinating stuff. I'm going to get you to look into your crystal ball once again. Of really in terms of what types of cancers do you see, Syriac, that will see the most breakthroughs in the coming years?
Yeah, it's a great question. I would answer this by saying you will see it in lung cancer because the 5-year survival rate is unfortunately still only at 28%. Although we doubled it from 14 to 28 in the last 20 years. We have a ways to go, and we will. Hopefully, we will help a little bit with that with Earli. Secondly, I think pancreatic cancer. You just saw major breakthroughs for the first time in 40 years. At ASCO, people got up in the hall and clapped, which almost never happens among the scientists and doctors sitting in the room, I can tell you that. So why is this happening? Because artificial intelligence allows us to speed up the process of innovation and drug development in a way that was never possible before. The intersection of the physical atom and the digital bit, that's where we're going to see the biggest innovations with AI. And one of those is robotics, and the other one is biology. Imagine if you could program biology, if you could program diseases against themselves to get rid of themselves. That's what we're going to use AI for, and I'm excited about it. It's way beyond the LLMs. It's essentially using the technologies for something that saves lives.
Let's hope so. Siri, thank you so much for joining us. Fascinating stuff. Siri at Roeding there, CEO and co-founder at cancer therapeutic startup Earli. We're checking, of course, Indonesian markets here today. And yeah, it's been a pretty ugly sell-off for the last two sessions here. We're seeing another 4% decline on the JCI. So that racks up to 8% losses here. And that's the biggest two-day drop we've seen since January of this year. So certainly there's more kind of concerns when it comes to the rupiah as well. We are around that 18,000 level here, which has been a level that, we are looking for intervention watch and the like. So certainly the outflow story continues when it comes to this EM market here today. And we are now talking not just the stocks, but also the currency continue to see weakness here. We have plenty more ahead. This is Bloomberg. All right, as we've been tracking, of course, what's going on in Jakarta here this morning, we're closely watching the rupiah here after it did hit that 18,000 level. It is a new record low, and certainly the markets are watching and putting traders really on edge here this morning as we continue to see dollar strength. And that really is causing more outflows into the equity market here this morning. But it's not just the rupiah. EMFX certainly seeing a lot of pressure here. Let's bring in our EM and macro strategist, Marcus Wong. He joins us with more. Marcus, tell us what's really driving a lot of this right now. With Indonesia specifically, there's many challenges that this economy is really dealing through, and we're feeling it right now across these markets.
Yeah, I think, they're caught in a sense a perfect storm. We saw as you mentioned, it breached the 18,000 level today. And I'm pained to add, this is a very key psychological level, right? Every round number from 17,000, 18,000, these are key levels. Now, I think going in today, there were some expectations in the market that, maybe Bank Indonesia might actually step into, maybe more heavily defend the currency. But nonetheless, we saw the currency breach past that level. And I think, what investors are saying that this could really just accentuate the momentum of outflows from Indonesia going forward. And, as you said, it's just a firestorm of different things, right? All prices, of course, are high. And, of course, that has, been weighing on EM assets in general. But for Indonesia specifically, there is also the question about investability. We just saw the, stock index on Monday fall to a 5-year low. And part of this is due to concerns over, being downgraded to a frontier market economy. In addition to that, also, of course, there are larger concerns about a potential rating downgrade. We've already seen, Fitch as well as Moody's revise down their outlooks for Indonesia. So, of course, lingering behind all this is whether we might actually see a rating downgrade moving forward. Bank Indonesia, of course, has been stepping in. They've advised smart interventions and so on. But, they at most can slow it down, but it can't stop the direction of travel, which is for a weaker rupiah moving forward.
Okay, what levels can we watch? Not just when it comes to rupiah, Marcus. We're seeing a lot of pressure when it comes to the Korean won. We talk about the rupee. I mean, it seems like this dollar strength is coming back in a big way. Beyond just intervention, what sort of tools do you think that central banks need to really start deploying now?
Well, I mean, of course, going through reserves is one of them. So you've seen, the likes of Indonesia, India, going through the reserves, and not just the spot reserves, but also their forward books. But we've also seen, different authorities become more innovative in a sense. With Korea with a national pension NPS hedging, even Indonesia with its control over exports. But just to highlight, get back on Indonesia about their goal to actually control exports of commodities. In a sense, there's a sense that this could actually eventually may backfire in the longer term because this brings about the investability of the economy in question. So, you're right to say, though, that I think different central banks, different authorities across the board have stepped in. Going through reserves is one of them, but there's only that much they can do, when the dollar is rebounding. And, also, I think a talk in the town is even if there is some resolution, and I think there's hints of that coming in, there might be some, resolution coming in for the Iran war. The reality is that oil prices still remain very high, and this will continue to weigh on these net oil importing economies.
Yeah, hoping for some sort of positive catalyst here. Marcus, thank you. Our EM and macro strategist, Marcus Wong, joining us out of Singapore this morning. It's not just a currency story. We're talking about crypto as well. Bitcoin fell to its lowest level since the Iran conflict began as renewed clashes in the Middle East weigh on market sentiment. Let's get more now from our cryptocurrency reporter, Subhashri Ghosh. Subha, it's great to have you. It couldn't be more apparent, this gap that we're seeing with tech versus crypto. Walk us through kind of what's really driving this sell-off in crypto now.
As you said rightly, it is a very idiosyncratic crypto syndrome that we are seeing now. What is happening basically is this week, the strategy, which is the biggest, single largest buyer of Bitcoin. So they said that they have sold a very tiny amount, like $2.5 million of Bitcoin. But that has shaken the confidence of, the entire market, because Michael Saylor, who is the founder of Strategy, had said that he will never sell Bitcoin. And he's, in a way, broken that oath to the Bitcoin maxis. And that has led to a spillover across the entire market. We can see, Bitcoin is just not a standalone cryptocurrency. It has a, broader ecosystem, it is linked to ETFs, it is linked to derivatives, it is linked to digital asset treasuries. So the entire ecosystem's trust in this conviction story in Bitcoin is kind of a little bit shaken, and that is it's basically a psychology driven kind of, and a mood driven kind of sell-off. But it's really picking up, as you see today as well.
Yeah. Thank you. Subhashri Ghosh there in Singapore joining us on the moves that we're seeing in Bitcoin as well. So from that, of course, we're going to talk a little more about tech and go to San Francisco now, the Bloomberg Tech event that's happening there. Our very own Tom Giles is speaking with Andrew Feldman, the co-founder and CEO of Cerebras System. Let's take a listen.
And you disintegrate the process, right, where the AWS Trainium handles one part, and then you take the part of inference where you decode. So talk a little bit about that, and more to the point, talk about how that is a blueprint, or can be a blueprint, for work with other hyperscalers.
We had a pretty good 90-day run. We did a deal north of $20 billion with OpenAI in a committed take-or-pay deal. And then 45 days later, we signed a big deal with AWS. Yeah. The idea in most cases as a computer architect is to try and look at a problem and think about what the right machine is for it. Should you design the machine? Can we use somebody else's machine? And what we saw in 2015 and 16 was the rise of a new workload. And we thought, well, this workload's going to eat a lot of compute. This new AI is going to eat an extraordinary amount of compute. And we made two contrarian bets at the time. The first was we will build dedicated silicon for it. And number two, we will not build something that looks like a GPU. We will start with a clean sheet of paper and build something entirely different. And both of those, at the time, people thought we were mad, and it turned out we were dead right. Now, if you fast forward...
It doesn't seem like there's not much let up in sight right now when it comes to some EM markets here, particularly when you take a look at how Indonesia is doing. We are continuing to see downside of close to 5%. So that racks up about 9% losses here already for the last 2 days. And we've been talking about this sort of plethora of bad news when it comes to this economy, whether it's energy prices, whether it's fiscal concerns, whether it's about reclassification with index providers. So that certainly is one thing. And that's really weighing on the currency side of things here today as well. And even the likes of some of these tech darling benchmarks like the Kospi coming back from that holiday continues to see downward pressure here. And there you go. Rupiah just around that 18,000 level here. Probably one of the worst performers in the Asia FX space here. And Bitcoin, we're off the lows, but still seeing some downside. That's it for us here on The China Show.